you had 11 months worth of quantitative tightening, over 2/3 of it erased in the last 2 weeks.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics. And once again, it is time for this week's Physical Silver Report. And we called in Andy Schectman of Miles Franklin, who joins us every Tuesday amidst a busy time in the silver markets, amidst a busy time in the banking markets. At least on Monday of this week, it was a good day for banks. We'll see. Seems to alternate almost by the day. So Deutsche Bank up today, down on Friday. We're recording on Monday. We'll see what Tuesday has in store. But Andy, I know it's been keeping you pretty active these days, and thanks for making some time to join me. And how are you today?
I'm doing very well, Chris. Thanks for having me, buddy. Yeah, Deutsche Bank, their 1-year credit default swaps, which are typically the classic derivative counterparty risk hedge. It's kind of like insurance on the value of the bonds that these banks put out, kind of like trying to buy car insurance after you've had a couple DWIs. The price goes way up, and that's exactly what's happening here with Deutsche Bank. Certainly, the credit default swaps are saying that Deutsche Bank is on thin ice. We've been hearing that for a long time. In fact, I'm surprised that they didn't go down before Credit Suisse did. But anyways, bottom line is that, yeah, this is emblematic of what's going through people's minds right now. It's one thing to say that the stock market and the bond market and the real estate market are shaky. It's another thing altogether to say that the banks where you think you're putting your money, not a speculation, anything, but that's not a safe place to be. And it's a whole different level of anxiety, something that I never thought I'd see in terms of what's going on right now, Chris. I can't even explain it to you other than to say it's been pure chaos for the past 15 days, and it isn't ending. In fact, it's just increasing with every bit of stupidity that comes out of the administration's mouths collectively, and what's happening with the banks and what's happening geopolitically with the greater formation of the BRICS and these alliances that are being made. And and I mean, my God, you see an agreement between Saudi Arabia and Iran, mortal enemies, that was brokered by the Chinese. And these are huge events, and the media is just missing all of it. And they're not talking about the significance of any of these events other than just glancing over them. But they're not talking about what it really means and what it portrays for the future. And I think people who've been watching guys like you for a long time are figuring it out, or have figured it out. And it's been exciting, but it's also been exhausting to say the least, unlike anything I could really even try and explain.
Well, I guess as we were talking before we started, there was one comp which we'll play a second of here for anyone who was born in the 60s or 70s. Might be.
The prices are insane. Ladies.
So what it feels like. That's really what it feels like. And those snowballs are phone calls and emails. And look, I feel blessed that people trust me enough to send us their emails and these phone calls. But it's a different level of anxiety. People are motivated now out of complete and total fear and concern. And I think a lot of it, and most of it, is 100% justified when you look at the things that keep on happening. But the decisions by our administration and by Janet Yellen and the Fed, and literally you had 11 months worth of quantitative tightening, over 2/3 of it erased in the last 2 weeks. The things that are happening are mind-boggling, and I think people are waking up to that for the very first time ever in my career. People are really waking up to what precious metals actually represent, and it's not an investment. It's more than just wealth, and it's the one asset that is being accumulated by the central banks. And if that's not telling, I don't really know what is. Simply to say the price is the greatest tool of misdirection. I know both gold and silver have done well lately, but still, relative to where they should be, if the COMEX market were allowed to trade freely, we are a fraction of where we ultimately will be. And I say that specifically based upon the positioning of the most sophisticated traders in the world. And they're making a very strong push and a strong effort to position themselves into metals and run cover by holding down the paper price. And it's worked beautifully for a long time. I think we're getting to the end of that game where the physical demand in this country alone, I think, has the potential to overwhelm the ability to hold down a paper price when such a very small subsection of the public has ever understood what precious metals represent. And now with all of these states, as we've talked about before, Idaho and Alaska and Missouri and Wyoming and Kansas and Mississippi, and the list goes on, Texas, they're all not only voting to allow silver to be part of the treasury of these states, but to allow it to be legal tender for debts, public and private. It is waking up people who never even thought about it. And when they see the performance, not only of their stocks and their bonds get hit so hard last year, the stupid brain dead monetary policy of the Fed and the crazy decisions by our government, and then to see that to think for a moment that the banks that represent 70% of the small businesses in this country, the small regional banks, are on the chopping block and won't be bailed out unless they're quote unquote systemic enough for members of the FOMC, the FDIC, and Janet Yellen herself to be judge, jury, and executioner. I think people are really very, very scared. In fact, I have a friend who's runs a very large book for Morgan Stanley. He says the amount of money that is pouring into Morgan Stanley is off the charts. People are emptying their bank accounts in these regional banks, which is just going to make these banks turn over upside down because they're loaded up with toxic assets. And the crazy thing is those toxic assets were not speculative. They were 10-year treasuries and mortgage-backed securities, which were conservative, until they have to sell them in order to mark them to market to come up with the cash to pay depositor withdrawals. This is the beginning of something very frightening if it continues. And sometimes I wonder if this was intended specifically to drive everyone out of these small banks. But when you realize that they represent nearly 70% of the small businesses, which represent traditionally up to 40% of GDP, this is a scary thing. And I think people for the first time understand that there are very few places to run, and gold and silver, and in particular silver, is the most undervalued asset on the planet with the greatest story ever, upside potential, supply, not only supply above ground, but in the ground, and uses that are expanding. I mean, there's so many reasons that silver is staring people in the face that I think they're beginning to understand what it really represents, what you and I have been talking about for so long, beating our heads on the table saying, why don't people see this? Why is it just a small group of people who get this? And us tinfoil hat wearing silver and gold lovers, I think, we're well ahead of the crowd and well ahead of what ultimately I think will be a massive shift out of traditional assets and into the only place in my mind where you can safely seek refuge, and that is gold and silver. And at the same time with silver, it represents a hell of an investment opportunity. And even though I sell it as wealth, I think there are very few things that offer the potential that silver does right now.
Well, along those lines, some news that we had out, this was just perhaps prior to last weekend. Here's from the Scottsdale Mint, mentioning that Royal Canadian Mint just reported to dealers that they made a huge error and over-promised coins to dealers. Their estimates for deliveries got pushed way out. Many dealer pre-sale coins based on estimates from the government mint will now have to either refund or ask their customers to wait months for coins. And I know you mentioned you were also hearing something similar from the Austrian Mint. What could you say there about the supply of some of the sovereign coins?
Those are both true statements. The Austrian Mint went on allocation last week, and the Royal Canadian Mint did underdeliver to us what we were promised last week. And this is what I've been trying to say for a very long time. And in every one of our podcasts over the past several months, we've talked about supply and about premium. And I was perplexed, over Thanksgiving and Christmas and New Year's, why the premiums came down. And the only thing I could come up with to me was people just wanted to get out and live life for the first time in 3 years without the restrictions of a pandemic, without the fear of hugging grandma and kissing grandma, without risking her life or flying on an airplane to travel and enjoy the holidays without being terrified or whatnot. And so I think that was what pushed people outside and turned off their computer screens and stop thinking about precious metals. That also, in conjunction with the new allocations for 2023 coming out, I was begging people to realize that was a sweet spot, and it was, and it still kind of is. And I'm perplexed that the premiums haven't shot up yet. They are climbing, but the amount of volume that we are doing, we did more volume in the last 14 days than I've done in many years before. And, you know, this is a situation where this is not just centered in the United States. I mean, you have the whole world waking up to the idiocy of the world and to the frightening aspects of what is happening, and the pivot that is being moved away from the West, and what that really means. And so we are competing with folks in the United Kingdom and in the European Union and in Austria and in other parts of the world who are doing the exact same thing that people here in the United States are thinking about. And certainly when you see Credit Suisse fail, and when you see rumblings of Deutsche Bank failing, and other European banks, that including the French banks that are teetering, it is certainly, I think, freaking people out. I mean, when you talk about the Austrian mint, the Philharmonic is probably the most widely distributed coin in all of Europe. So you have the Europeans that are saying, you know, give me whatever you got. And what's even crazier about that is that almost every country in the European Union has a VAT tax on silver. So when they're buying silver, these people are paying a 15, 18, whatever that VAT percent tax is, on top of spot, just to get it. And that's how concerned people truly are. Because what other asset allows you mobility and physical possession, the removal of counterparty risk? What is all of this? This is all counterparty risk. This is all systemic risk. And it's all because everyone's tied together through derivatives. And a derivative's value is based upon the counterparty's ability to make good. Well, if one counterparty fails, what does that mean? And, you know, no one is even talking about the $20 billion bailout that was given to this, I think they're called the Swiss Bank Corporation, by the Fed, the second largest bank in the world. And that preceded the problems that we saw with Signature Bank and Silicon Valley Bank and Credit Suisse, where we're quietly bailing out the second biggest bank in the world in Switzerland because of this systemic problem. And this is what happens when you jack rates up as fast as they have, and yet they still haven't even gone high enough yet to tackle inflation. We haven't even reached that terminal rate, as they like to call it, the rate of interest, where without even raising rates higher, inflation starts to come down. They believe it will be somewhere in the neighborhood of 5.25%, and I think that's where they will continue to raise rates until they hit that target. But just raising rates the way that they did has thrown the entire global banking sector into massive problems. And that's because with rates so low over the last decade, you put your money into a savings account and receive 0.25%. So these banks would put their money into 10-year treasuries and into mortgage-backed securities that were all Fannie and Freddie guaranteed, backed by the government. Everything seems safe. But because they had no reserve requirements, they don't have enough money on hand to meet depositor withdrawals. So they have to sell these bonds, which are marked at par on their balance sheet, but have been eviscerated by 50 or 60%. So when they sell them, it ends up killing them. And if enough people run at the same time, just like we saw at Silicon Valley, in 24 hours, boom, it goes bust. And when Janet Yellen tells the world that, no, these regional banks won't be bailed out unless we believe, as an uber majority of the FOMC and the FDIC, that they deserve to be bailed out because of systemic risk, they won't. And what message does that send to all of the small businesses throughout the country that have used these banks for decades, and their families have used them? What message does that say? That says, get the hell out, because you won't be bailed out and you will lose everything. That's the message she gave. And it's very frightening, and it's very real. And, you know, when you realize that the FDI insurance only covers 0.03% of all the deposits out there, it's a joke. So either they continue to backstop banks as they fail by inflating the currency away to worthlessness, a la 2/3 of all of the quantitative tightening we've seen in the last 11 months, bam, gone, just like that, in 2 weeks. And they're destroying the value of the currency, or they continue to tighten and ratchet up rates, and blow up the whole banking system. Or worse yet, God forbid, this growing alliance of countries around the world that are now really joining BRICS, and including Mexico, who just formally applied to BRICS. And we see the Russia coming out and saying, we want to issue through China, we want the entire Eurasian continent to use the yuan or the petro yuan for oil sales, which is immediately convertible into gold, and the Shanghai Gold Exchange. This de-dollarization, this move away from the Western hegemony and hypocrisy, as it accentuates, and these countries dump dollars and bonds when there is a new settlement currency for oil. If you think banking problems are bad now, watch what happens when you see a tsunami of inflation hit our shores, and the byproduct of that is spiked interest rates to the moon. And here again, just yesterday, Kenya signs a deal with Saudi Arabia and the United Arab Emirates to buy oil with Kenyan shillings instead of US dollars. It's like the game of Jenga. Every one of these things is another piece pulled out until the US Jenga tower collapses. And that's when things get very frightening, because everyone is focused on what Jerome will do and what Jerome won't do and what Janet says and what Janet doesn't say. But what they're missing the point is what happens when the rest of the world says thanks for the memories, and that's coming. And you can see that by this coalition of countries that is growing by the day, including our allies like Mexico, like Egypt, like Saudi Arabia, like Turkey. They're all not only massively accumulating gold, but they've all applied or have already been accepted to, in the case of Saudi Arabia, the BRICS nations, which is a far bigger story in my mind than what is going on with the Federal Reserve, which is just a sideshow. But you can see that sideshow in and of itself has huge ramifications on the entire global banking system. So, Chris, in all the years I've done this, I've never spoke this way. I have never talked to people as if, it's scary, you got to do something about it. I've always looked at gold and silver as wealth. I always tell the story of the only rule that my dad told me I had to abide by when we started this company as a 19-year-old kid 34 years ago. And that was, I'll buy something every 2 weeks. Okay, fine, I said. And for almost 34 years, I have done that. I've honored that promise. I buy something every 2 weeks. It's my wealth. But for the first time in my life, I truly am saddened and frightened as to what's coming. And I'm not lying. That is not bullshit. That is real. I'm saddened for the world my kids are growing up in and for what the world may look like in just a few short years or less. And I'm very concerned as to what it truly does mean. And I think that with every one of these stupid moves that are being made by our administration, it only is cementing the unification of the majority of the world away from the West. And Kenya, a meaningless country, which in and of itself means nothing, is just another Jenga piece out of the Western hegemony. And it's coming. Yeah, there he is, our leader who has brought together mortal enemies, Saudi Arabia and Iran, in unison against us, because their enemy's enemy is their friend. And so I think that's where we're at. Well, they're building embassies right now in each other's countries. There is now a China brokered railway between Iran and Iraq, the first ever. You're seeing these countries who have been at odds for centuries now realizing this is their one shot. And the only way that it all works is to use commodities to peg to a system that allows every one of these countries equal footing and equal say and equal weighting at the table. And that's what they're doing. And they're doing it little by little by little. And you can see it right if you just look. Even Fox and CNBC are talking about it now. They think they're onto something new. This is what I've been screaming about for 3 years. But what they're missing, even Fox and even CNBC, is what happens when the switch is flipped. What happens when Saudi Arabia and the other 13 OPEC producing countries say, we're now taking a new settlement currency? What happens? Bang, the dollar collapses. It's dumped by the majority of the world who's had to hold it for 50 years to buy oil. And when that happens, everything that we are talking about right now seems like a party. And I hate to say it, but I don't see any way around it. And when you see a fragile banking system, put interest rates up to 15, 18, 20% as the dollar gets dumped globally and watch what happens. And This is a lot more than your 401k. This is a lot more than the insurance policies that you have in insurance companies that are teetering when that happens. But this is the real deal. And this is why you buy gold and silver and hope to God it doesn't happen. You prepare for the worst and hope to heck for the best.
Yeah, and in there you mentioned the BRICS a couple times, and something that some people may have seen, some may not, but here was Xi Jinping and Vladimir Putin a couple of days ago, and I'll play a little bit of this here, and then we can take your comment. Right now there are changes, the likes of which we haven't seen for 100 years, and we're the ones driving these changes together. Interesting to imagine what specifically they have in mind, although you also mentioned Kenya in there. There was this interesting clip, which I'll play a couple seconds of this one, and then we'll get your comment, but let me play this one here.
Who work numbers. I am giving you free advice that those of you who are holding dollars, you surely might go into losses. You better do what you must do, because this market is going to be different in a couple of weeks. And secondly, we, through the central bank, we are having conversations to reinstate the interbank exchange.
So that was the part I mentioned. This market is going to be different in a couple of weeks. He did not elaborate further on that, but
well, if that doesn't scare the hell out of people, I don't know what does. I've been screaming this, Chris, and you know this. You know, I've talked a lot about this, and you know, I've been screaming about this for a long time. You can see it if you look closely, and this is the rest of the world moving away from the West, because what does the West have to offer in the currency that's being eviscerated, in treasuries that are being eviscerated, in policy that is so adversarial? If you look at what China is doing, they are forming alliances of mutual beneficial interest. They are showing, you know, when you talk about what China is doing in Africa and South America and other countries like Saudi Arabia, they are building ports and railways and bridges and refineries and building mines, and they are helping these countries become industrialized and build a middle class and move away from the West. And they are doing it with cooperation and with money, instead of being bullied by sanctions or on any way that the West has bullied everyone into doing what they want them to do. That's not the path that China is taking. They're not dropping bombs on countries. They are going in and they are forging alliances. And the fact that they can get Saudi Arabia and Iran to sit down at the table and actually agree to putting embassies in each other's countries and building railways between Iraq and Iran, if that doesn't tell you what they are doing, they're from a perspective of I mean, it's genius what they're doing. Let's just call it what it is. And some people may think that they don't like that comment, but it's genius. I mean, this is their one chance to come in and undermine the stupidity of the West. And again, look, I am a patriot. I am saddened by what is happening. This country has afforded me so many things that I can't even believe I'm sitting here talking to you because of this country and all the great things that it's offered me. But I mean, it's very troubling. It's very, very, very troubling what is happening. And they know the West is caught, because if they do what they need to do to stop inflation from killing everyone's pocketbook, then they blow up the entire system. And if they don't, then they have chosen inflation. And this is what they're saying to these countries. Why would you want to sell your oil or your goods to a country who's going to choose inflation, and the dollars they give you, like he's just saying, will be worth less and less and less and less? And why do you want to sell your oil to a country or to the West who's going green? You won't. And you know what? All of us together have a military presence that is stronger and more united than the West. And this is what they are talking about. And when they are ready, it will be too late, because everything will have been moved into place. And that is what everyone is missing. They see little pieces here and little pieces there. Put it all together. And if you put it all together and take a step back, and you're like, holy crap, this really is happening. And I don't know why so few people have seen this the way I have over the last few years. I don't. Now people are talking about, but they still haven't connected the final dot. What happens when they say, like he said, things will be different? When it's one thing for Putin to say, we're gonna, with China, we want to use the yuan for the settlement throughout the Eurasian continent. But what happens when OPEC says it? And they haven't gone there yet. What happens when every country on the planet that's had own dollars for 50 years says, we don't need to hold them anymore. We don't like them. Dump it. And everyone's dumping it. So dump it fast. What happens? And it becomes a religious experience. And if you're not prepared, you're screwed. And that's the truth. This is a hurricane coming. This isn't just a little rainstorm. This is the end of 100 years of Western dominance right on our doorstep. And that is exactly what Xi Jinping was saying to Putin. And it doesn't take rocket science to understand that's what he was saying. And, you know, you go back and literally we have been the dominant power in the world for the last 100 years. And you could argue on every single level that is changing. And that's what he is getting at. And this is why you're seeing all of these countries, including our allies, Mexico, moving away from the West. And, you know, I was thinking about something the other day. This is just way out there, but I'd like people to put things into perspective. We think about what's happening in the Ukraine, and everyone is so angry at Vladímir Putin. And I don't condone war, nor do I condone anything that's happened. I just want people to look at things from a broader perspective. You know, part of the Shanghai Cooperation Organization's charter, and that's 60% of the Eurasian landmass as it is right now, and about 60% of global GDP. That's all of the countries in BRICS they're all together. Most of them are in the Shanghai Cooperation Organization. They're all on the Belt Road Initiative. It's a military organization as well. Can you imagine what would happen 5 years from now, 6 years from now, 7 years from now? Mexico is really entrenched with the BRICS nations. They're the second largest economy in South America. Can you only imagine what would happen if they had a joint military presence with the BRICS nations, with military bases filled with Russian and Chinese military stationed right outside Texas on the Mexican border? And then you take a look at the way he feels with NATO infringing and encroaching upon them in the Ukraine and in Finland and all these countries that said they would never do that. Well, what did we say? We have a naval charter, and I forgot the name of it, but that says you can never have these foreign naval bases anywhere near us, you know, in the Atlantic Ocean. And can you only imagine the way that this country would feel if all of a sudden the BRICS countries have a military force similar to NATO, and they're stationing them in Mexico and in Brazil and other South American countries that have already expressed interest in joining? Can you imagine the way this country would feel? This is something that people need to take a step back and see what is happening and look at it from a broader perspective. Whether or not these things happen, look at it from the way the rest of the world is looking at it. It's okay for us to do this, but no way you can do it. And that's exactly the rallying cry that is bringing everyone to the table. We can decimate Iraq, who just signed a deal with China to do all settlement in yuan, not the dollar. We can decimate them. And really, that did a whole lot of good, the rebuilding of their country, when they're now taking yuan instead of dollars. And under the guise of weapons of mass destruction, don't find any. And yet it's okay. But if another country wants to do something that we don't feel is exactly right, well, they're out. Kick them out. And in the case of the EU, they not only sanctioned Russian assets, they've confiscated them and have told that Russia, they will be used to rebuild the Ukraine, and they will not be given back. So the world is looking at this hypocrisy and saying, this is our one shot. And that's why you're seeing all of these countries move. And now you hear rumors, of which we've talked about on your show, Jim Willey saying that Japan is going to do it, and Australia, New Zealand. This is getting more and more real by the day. This is why people need to understand that silver is the opportunity of a generation. This is a generational value, a generational value. And I say that to my soul. I mean that. There is not another asset on the planet that people should own other than silver, period. Because not only is it massively undervalued, it is a strategic metal that is being gobbled up by the world, and it is depleting in nature. It is depleting above ground. And now you see the major mints. We're going right back to where we were over the last 3 years. When these mints, you have to realize there are 6 major mints in the world: US, Canada, Austria, Australia, South Africa, and the United Kingdom. Two of them are now on allocation, and Canada is saying it's going to be months. So what does that mean? The U.S. has been the model of inefficiency. So we're at 2.5 right now. 2.5 out of 6 ain't a good thing, because the world is accumulating, not just people here, and it's getting late in the hour for people who haven't understood this yet.
Yeah, not an ideal set of circumstances out there, that's for sure, because like you described, we have the banking issues going on at the same time. I guess the BRICS and foreign issues seem to almost have been put on the back burner for a little bit, yet still very much out there. And Andy, the last thing I wanted to check in with you about before we wrap up for today, what has happened with the premiums in the last week? Have things come back in at all, or still escalated and going up? What could you share about that?
They have gone up a little bit, especially in Silver Eagles, but I'm very proud to say, and I mean this, in silver, we are the best priced company in the United States, as far as I can tell, anyways, or at the top 1/2 of 1%. I haven't raised premiums because I told you on maybe last show or the show before that I have bought everything that wasn't nailed down. We went deep into our line of credit. I bought everything that I could get, and I haven't really raised premiums. Some of them are starting to climb, and they will. When you see this with the RCM and the Austrian Mint, it's the beginning of premiums that will massively go up. And I don't know why they haven't gone up yet. I think they certainly should have, based upon the volume this industry is doing. But it's still a very good time premium wise to buy metals. And I would say by the next time we talk, it would shock me if premiums haven't gone up considerably. One other thing that I promise you, I mean, I've asked everyone, including my U.S. Mint representative, and no one really gives me a good answer as to why the 1 ounce gold eagle has a $50 face value. I know you've asked me that repetitively. The only thing that I can get even close to is that the official price of gold is $42.22 an ounce, and that it is legal tender by the United States, but it's not currency. So it's not like you'll bring that into a bank and get $50. You know, the fact that it has a $50 face value really is meaningless. Let's just hope that there isn't something diabolical behind that in terms of confiscation, or God forbid something along those lines. I don't think that's the case. Certainly it would be very difficult for them to pay you $50 justifying the official price of $42.22 when the world price is $2,000 or nearly. But everyone I ask, including people at the Mint, no one can give me a good answer other than the price that is on the books for the U.S. for their gold holdings is $42.22 an ounce. So take that for what you will. I've tried hard to find it. No one seems to have a good answer. I don't have a good answer. But maybe after the reset, maybe it will be $50, and $50 will be an ounce of gold. And who knows? All I can tell you is it doesn't matter. And what matters is that people minimize their exposure to the system and get the hell out of regional banks before you regret it. That's the best I can say.
Well, appreciate you looking into that. That one was for superfan Jake out there, and I know he's been wondering about that. So thanks for checking in there. And I guess just as we wrap up, if people have questions, want to know pricing or anything, buying or selling gold or silver, what is the best way to get more information?
Well, you know, forever I've been so proud of my relationship and honored of my relationship with you. And so anyone who's watching this show, please send an email to Arcadia at Miles Franklin. Ask questions, ask for a price sheet. We'll get right back to you on that. And I showed you, for everyone out there, and although we're not going to have you screen share this at the moment, you can attest to it. Our website is done. We're just waiting for one last piece, and that is the credit card and tax software to be plugged in. It's close. It's closer than it's ever been, and I'm very proud of the way the site looks. And so until then, obviously, they can refer to our website, which doesn't have pricing and just information. But questions, if you're watching this show, Arcadia at Miles Franklin, and we'll do our very best to get back to you immediately with the information you're asking for.
Well, appreciate that, and appreciate you again making some time to share what you're seeing out there. I know there's a lot of people obviously interested in silver who look forward to hearing from you each week. So Andy Schectman and Miles Franklin, thanks again for joining us, and we'll look forward to seeing what happens next.
I love you, brother. You stay well. Everyone out there, stay well. See you next week.
Well, thank you, Andy, as always, for this week's Physical Silver Report. And as he well pointed out, certainly quite a lot happening out there, which I know can be a lot to digest on a day-to-day basis. And just hope at home that you're doing all right handling some of the things we see going on in the world and just doing well out there. So before we wrap up, I would like to thank BlackRock Silver, who kindly sponsored today's video. And it's been a busy couple of months for BlackRock because at their Silver Cloud project, they've been getting the permitting in place to do a follow-up drill program after they intersected a hole that had 52 grams per ton gold and followed that up with the metallic screen gold assay, came in with 70 grams per ton gold, and they are getting the permitting in place to do a 4,000 meter drill program. Of course, they also have their lithium project where they've partnered with Tierlock Resources, who is doing the development work on that as part of the agreement they have. And Tierlock has commenced the drilling at that Tonopah North project, which is part of an arrangement where the drilling and development expenses funded by Tierlock in exchange for a split of the lithium resources that they find on the project. And of course, BlackRock continues to drill and develop its Tonopah West project. Back in January, they cut 1.5 meters of 712 grams per ton silver equivalent, which consisted of 2.367 grams per ton gold and 162.5 grams per ton silver, which suggests a strongly mineralized northwest structure and expands on the intercept discovered in the previous drill holes on the target. So certainly a lot going on at BlackRock as they have expanded their maiden resource, which they put out last year, and have a few projects going with several developments. And you can find out more about that at blackrocksilver.com. Or you can just click on the video coming your way. Andrew Pollard of BlackRock recently was giving his thoughts on the gold and silver markets in an interview that is coming your way now.